Hello and welcome back to another segment of the ShortSaleMinute.com. I'm Nick Lavera.
And I'm Ryan Smith.
Today we want to chat a little bit about tax consequences and how that relates to the federal law and state law, at least here in the state of California.
Time out. Real quick, little disclaimer for you guys. We're not CPAs. We're not tax consultants. We're not real estate attorneys. So take what we're saying with a little bit of grain of salt. I mean, it is fact, but however, you're going to want to check with your own CPA, your own real estate attorney, or contact us, and we'll provide you some names of some good ones that we work with.
Absolutely. All right, so with that said, tax consequences. In the state of California, you will receive, in almost all cases, a 1099. Under federal law, that went into effect, I think, in 2007. And extended through 2012, the 1099, the tax liability on that 1099 is forgiven by the IRS. That is part of the Foreclosure Relief Act. I believe that's the legislation that protects you. Here in the state of California, just recently, Arnold Schwarzenegger signed.
I'll be back.
Signed into law a provision that exempts folks who are going through foreclosure or short sale from state income tax. Not every state has an income tax. For those of you that are living in a state with a state income tax or other tax peculiarities that we aren't familiar with, you need to check with your CPA or find someone that you trust that can answer those questions for you. The bottom line is, here in the state of California, you are protected from both the state income tax and the federal income tax.
Correct.
Correct. Anything to add to that?
A lot of people are scared of the 1099 portion. They're scared that if you short sell your property, you owe $250,000, you sell it for $150,000. There's a $100,000 spread there, and a lot of people are scared because obviously that will be reported as income, or most people associate a 1099 with income. However, regarding the laws that Nick spoke about, you're forgiven on that. I mean, you have to qualify still. There's certain characteristics of the property, whether or not it's purchase money, whether or not it's your owner-occupied property. A good CPA, good tax consultant will be able to guide you through that. So don't fear the 1099. It's actually your friend, and I'll tell you the reason why. It's because it's going to help you avoid a deficiency judgment. A deficiency judgment is basically down the line, the lender can still come after you for that difference, and we don't want that to happen, because they're going to attach or kind of pick the low-hanging fruit down the road. And once you kind of recover from this situation, and let's say you have some assets down the road, we don't want the bank coming back after you and saying, hey, look, you owe us $75,000. So by them issuing you the 1089, they cannot seek a deficiency judgment. They can't do both. It's one or the other. So don't fear the 1099.
Don't fear that. That's a logo.
It is.
Don't fear the 1099.
Yes. Absolutely.
All right. Well, this was Nick and Ryan from the ShortSaleMinute.com with another Short Sale Minute for you.
Have a good one.